Live from New York City this morning. Good morning, good morning. Equity futures shaping up as follows. Positive, 0.5% on the S&P. The focus of the world is in Brussels. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Ferro.
Live from New York City, we begin with the big issue. NATO members touch down in Brussels.
Good morning. We meet here at the NATO headquarters, facing the most serious security crisis in a generation. And we will address this crisis together.
That delivery coming from Jens Stoltenberg as President Zelensky pleads for more help.
Come to your squares, your streets, make yourselves visible and heard. Say that people matter, freedom matters, peace matters, Ukraine matters. From March 24th, in downtowns of your cities, all as one together who want to stop the war.
Going into a G7 meeting, leaders preparing to deliver a warning to Putin. Bloomberg reporting the US is working with NATO allies to prepare for the possibility Russia deploys biological, chemical or nuclear weapons as part of its invasion of Ukraine. Team coverage starts right now with Anne-Marie at NATO headquarters, Maria Tadeo at the EU Council. First to you, AMH, that meeting just wrapping up.
Yeah, that meeting just wrapping up, Jonathan, and then the president, of course, will then meet with his G7 counterparts. What we know from this meeting of NATO allies is that they are planning and preparing for the possible use from Russia, from President Putin, to use chemical or biological weapons. Yesterday, Jens Stoltenberg, the NATO Secretary General, said this would have dire consequences on people of NATO. And we already know in that G7 draft statement that they are going to warn President Putin on the use of those if he were to use chemical or biological weapons and what that would mean in terms of severe consequences. Jonathan, what else to look out for the rest of the day? We should just note we are still waiting for the U.S. sanctions that Jake Sullivan said yesterday on Air Force One that we would get. And then obviously there's lots of talk from the United States to try to alleviate Europe's use and dependence on Russian fossil fuels.
So, Maria, we go from NATO, where Anne-Marie is, to a G7 and an EU Council. What are we expecting from those two meetings?
Well, what we know is that once again, we're going to hear from the Ukrainian president, and this will now go from a military conversation to a political one. Because remember, Jonathan, the talks between the Ukrainian delegation and the Russian delegation continue. And the idea here is that Ukraine will once again insist that they want to see a ceasefire, but also international security guarantees. And this is where it gets interesting for the European Union. The Ukrainians have said that, OK, NATO is very clear at this point. It's not going to happen. This country has had a major reality check on NATO. Some would argue it's been brutal, it's been cruel. This wake-up call that NATO is not going to come to the rescue of Ukraine. This is a war they have to fight for themselves. But the Ukrainians argue, provided that we don't join NATO, we want to get international security guarantees that would be signed and co-signed by countries like the United States, the European Union, and potentially include a membership to the EU. So the Ukrainians are making it clear they want to turn the focus to the politics of this and have a real conversation as to whether or not Ukraine has a place in the European Union to become the 28th member. But this is really a hot potato for European leaders. Some that believe we have to give Ukraine some hope. This has been a brutal war that continues. And others, I will tell you, we have to be real. Right now, this is a country at war. They're not in a position to join. But also, we have a lot of other issues to focus on, in particular, energy. And that warning from Vladimir Putin that he's only going to accept payments in rubles, that is also going to be a major part of the discussion. Now, do we pay rubles? Do we not? And I hear from a European official telling me we have no appetite to renegotiate these contracts. So it's up to Russia to decide whether or not they want to cut the flows if they only take ruble payments.
Anne-Marie, can I come to you on that? Fadi Birol speaking right now. The headline just dropped. Russia's move to rubles for gas would be a security threat. I want to come to you on that, AMH. What can this administration do with its allies in Europe to help them pull back on their dependence of Russian gas anytime soon?
Jonathan, you hit the nail on the head saying anytime soon. It's just not possible. Look at Germany. More than 50% of their natural gas comes from Russia. This is how they light their homes, they heat their homes, and just to turn off the taps overnight is just not possible. The infrastructure's not there. But what we should say is that the administration, and Bloomberg was one of the first to report this, working alongside EU officials, they've been going to producers around the world, notably Qatar as one of them, and those consumers of big giants like Qatar, like ships that go to Japan with LNG, and seeing if there's a way you can divert some tankers to Europe. Kind of a Band-Aid. Also, Jonathan, there's a lot of LNG in the United States that goes to Europe. Potentially, you could see some of that production be ramped up and sent to Europe. But we should note that this is going to be incredibly difficult. But the direction of movement right now is that at some point they will loosen that grip on Russian energy. We already heard from Robert Habeck over the weekend. This was kind of stunning. He went to Qatar. That would be a lot more expensive to get LNG from Qatar than through that Nord Stream 1 to Germany. And Jonathan, he said, in the months to come, we still may need Russian gas. In years to come, maybe not so. And he who has ears should listen. That was a veiled threat to President Vladimir Putin.
Well, let's talk about what we heard from the finance minister this morning from Germany too. Maria, an effort from Germany to cut the fuel tax for consumers and also to offer a subsidy, some support as well. That's from the Germans. And we just sat there on Bloomberg Surveillance this morning, Maria, thinking about who's next, who follows. Does the whole of Europe have to do the same thing?
Yeah, and we're going to hear it, of course, from the French. Remember, they've already done this, and in particular, Emmanuel Macron is up for re-election in 4 weeks' time. We've also heard it from the Spanish, too. We're going to have to take more measures to make sure that the cost of these energy doesn't get passed on to consumers in a way that could be detrimental or create social tension. The same when you look at Italy under Mario Draghi. Now, going back to what Anne-Marie said, today and probably tomorrow, we are going to get something on paper that signals the United States is going to help Europe to diversify its providers. And we also know there's European legislation that's going to kick in on this. The European Commission aims to cut down imports from Russia by 80% in the next 2 years. But what is so crucial to understand here, Jonathan, and it really kind of shows you the difficulty for a lot of Europeans in this, is that right now there isn't a European energy market. There simply isn't one. What you have is 27 different systems that work together at times, but other times they compete. Some want to use gas. Others will tell you what I'm interested in is the price of electricity. And that is the issue. For the Europeans, it's not about 2-3 years down the line. It really is about preparing for this winter that is coming up.
Maria, thank you. Maria Tadeo and Marie Hordern, both of them sticking with us through the hour. The back and forth is going to continue as the headlines pour in. So we go from a NATO summit looking for a news conference with the NATO Secretary General Jens Stoltenberg. That was meant to take place in the previous hour. As you'd expect, with an event like this, things move around. When that starts, I'll bring you some of the headlines. Then on to a G7 meeting. Then from there, onto a meeting with EU leaders. A lot to get through. The panel conversation starts now with PGIM's Robert Tipp, FlowBank's Esty Dwek and Griffiths of Wells Fargo. Esty, first to you. I've asked this a few times recently, and I think people are on the same page. This is the question for Europe. Can they avoid a recession?
That is exactly the big question. At the moment, I think I want to say, yes, they can avoid a recession, but the picture is certainly looking precarious at the moment. We know inflation is going to be a lot higher. We know costs are getting passed on to consumers. You have your heating bills, your petrol bills, also now food bills that are going to start to go up, growth decelerating. One thing that might have another impact is whether or not we see another COVID wave. We're seeing infections go up again. We don't talk about it so much anymore. So the momentum was relatively good coming into this year, which is supportive, but plenty of question marks because it's a long year ahead and there are a lot of obstacles right now.
Robert, listen to this revision from the UK yesterday for GDP this year, down from 6 to 3.8%. Now, even if we don't get a recession relative to what we thought we were getting, it might feel like one, won't it?
Right. Well, I think that's one of the few saving graces of this situation is that the world has come into the Russia-Ukraine situation with tremendous forward momentum around the world in so many places, except for China, tremendous economic momentum to the extent that, as you just went through, you have a huge bite taken out of the growth picture, and yet still an above trend, very solid backdrop. And I think that's likely to be the case in many places, unless it gets much worse. And obviously that prospect is there for either an energy cutoff or an embargo, as impossible as it may seem to get through. You never know when you may have to. So so far, that is one of the saving graces. The momentum there, and policymakers are certainly leaning into that, taking advantage of that strength, planning to tighten financial conditions, even in the face of these tremendous headwinds.
Zach, your take.
I agree with what's been said so far. And when we think about economic growth in the UK this year, we look for about 3.5% on an annual basis. So yeah, we have a lot of momentum coming into this crisis, and it's going to be a huge issue, especially across the pond. That's something that we're keeping an eye on. We're not calling for a recession in the Eurozone right now, but we'll certainly be monitoring the developments in Russia and Ukraine going forward. And that's going to really inform what's going to happen in the Eurozone, UK economies. But for us, what we're focused on is the relative central bank response. And it's been interesting to see the ECB remain a little bit more hawkish than we thought, and the Bank of England shift a bit more dovish in its last meeting. So that's kind of the lens that we're looking through the Russia-Ukraine situation at right now.
This is a headline that's just crossed. Jens Stoltenberg did have a job lined up at a central bank. NATO extending Jens Stoltenberg's term as chief for one more year. That man, a very busy man. Certainly you don't want to change your leadership with a situation like this. Just getting confirmation of that. NATO extending Jens Stoltenberg's term as chief for one more year. That term was up. Much more on that. Looking for a news conference to start with him any moment now down in Brussels. Robert Tipp, Esty Dwek, Zach Griffiths sticking with us. Coming up on this programme, world leaders coming together in Brussels condemning one man.
This illegal, brutal invasion of a friendly democracy in Ukraine by Vladimir Putin is absolutely unacceptable.
The conversation continues next.
Vladimir Putin has already crossed the red line into barbarism, and I think it's now up to NATO to consider together the appalling crisis in Ukraine, the appalling suffering of the people of Ukraine.
Global leaders weighing in on the situation in Ukraine as Russia continues its invasion. That was Boris Johnson of the UK making comments in Brussels just moments ago. A headline crossing moments ago as well. NATO extending Jens Stoltenberg's term as chief for one more year. I mentioned that he had a central bank job lined up. Norway came out at the same time and said this. The government saying that Jens Stoltenberg has resigned as the central bank governor, I guess before he even started. So comments from John Kirby as well, speaking to Fox News, a US broadcaster, saying the following. The US has clear evidence, quote, clear evidence that Russia is committing war crimes. Just part of the conversation in Brussels at the moment. I'll stay on top of that for you. For the central banks, it's pretty clear. Fed officials are ready to go, including even people like Mary Daly. Some people believe she is a dove. She sounded like anything but. Take a listen.
I will absolutely confirm what Chair Powell's confirmed for himself, which is that I have everything on the table right now. If we need to do 50, 50 is what we'll do. If we need to do 25 and balance sheet, that's what we'll do. But the data will help us determine how much is necessary.
Mike McKee, the San Francisco Fed president there, they are all lined up, aren't they?
Yes, and now the Minneapolis Fed president, Neil Kashkari, out just a few moments ago. He is perhaps the most dovish member of the Open Market Committee. He's not a voter this year, but saying that they have to do something about inflation, and he's penciled in 7 rate increases for this year. So he is sounding hawkish as well. And here's the problem. You take a look at where the Fed is and where the Fed thinks it'll be. That's PCE inflation. The last blue line is where we are right now, and that white line is where the Fed thinks we will be a year from now. Doesn't seem likely, does it? And you can see the yellow line, that's where the market thinks we'll be a year from now. And the Fed is worried that that's going to de-anchor inflation expectations, which is why you get comments like these. You heard from Mary Daly, but also from Loretta Mester yesterday. We need to be more aggressive earlier. And Jim Bullard, we have to be bigger. And of course, Mary Daly saying we have to do whatever it takes. The question is, can they do it? That's the next thing for the market to bet on, because the Fed doesn't have a great track record. On Monday, Jay Powell said, well, there have been historical examples of coming in for a soft landing, but I want you to look at the 2 boxes on the left side there, John. What was happening when the Fed was raising rates? Inflation was going down. So, of course, they had a soft landing. Inflation wasn't going up. Now you look at the right-hand side, and you can see a big difference. Inflation way ahead of the Fed. How high are they going to have to go to try to bring that down? And does that mean we can get a soft landing?
Mike McKee, thank you. A lot's changed in a week for this Federal Reserve, from the news conference last week to this chorus of individuals on the Fed calling for perhaps 50 basis points in May. A headline just crossed the Bloomberg. This sanctions list in America is getting longer and longer. With the breaking news, let's head back to Brussels and catch up with AMH. Hey, Anne-Marie.
Hey, Jonathan. Yeah, we're just getting this very well highlighted yesterday from Jake Sullivan, the sanctions on a number of Russian tycoons, oligarchs, elites, and lawmakers. Let's just quickly run through them. 328 Duma members. This is the parliament, as you would say, in Russia. They are getting on the sanction list, as well as Duma as an entity of itself. So basically, the entire Russian parliament is now sanctioned by the U.S. government. Herman Greff, Jonathan, a name that's very well known to Bloomberg viewers and listeners. He's, of course, the head of Sberbank. This is Russia's largest bank. If you are a Russian individual, likely you or someone in your family has an account at Sberbank. He's also been a key ally and advisor of President Putin since the 1990s, before he became into power at the Kremlin. We should also note 17 board members of Sovcombank and 48 large Russian defense state-owned enterprises, Jonathan. So this is just another ratcheting it up of the penalties at the Kremlin, and it follows, Jonathan, the heels of what we saw to the United Kingdom. They as well went after Herman Greff, the head of the biggest Russian bank, Sberbank, this afternoon.
This makes things very complicated if you're a debt holder of certain companies who are majority owned by one of these individuals. Anne-Marie, thank you. AMH over in Brussels. We'll stick with Anne-Marie through the morning, no doubt. Robert Tipp back with us, Esty, Dwek, Zach Griffiths. Robert, I want to keep you out of trouble on single names, so I'm going to do the single name story, and you're going to talk to me sort of hypothetically, theoretically, on what you think should happen here. Severstar became the first Russian firm to run out of time to pay a coupon, had a 5-day grace period, exceeded that. They have said they're trying to send the money, but the bank won't pay that money on. It won't clear the pipes, so to speak, to make this really simple and reach the end investor. Now, Robert, I want to understand from your perspective whether you would see that as a credit event. If the company has the money, wants to send the money to the end investor, but the money can't reach the end investor because of sanctions or paperwork, whatever it is, what is that?
Right. I think that, this is a highly refined area, and the legal experts are poring over this, and precedent is being set, as we speak. And so this is a very unusual situation. I think there is a standard that, say, for a sovereign, or a strong a priori going into this, that for the sovereign itself, that if you have managed to get yourself sanctioned, and as a result, you're dropping money into some place, you're trying to pay, but nobody will touch that money in order to forward it on, that is an event of default. But in some of these other situations where the money is out there and it's not their doing that they are sanctioned, that may be something that hangs out there and is yet to be determined.
The reason I ask these questions, Zach, I'm just trying to work out whether we fully realise the risks associated with this story yet. You've got foreign investors that can't sell, exit the Russian equity market. I mean, if you bring up the Russian equity market today, 4-hour trading session, there were, 30-plus stocks trading. You can't short sell. You can't sell if you're a foreign investor. The wealth fund is willing to prop those equity markets up, those equities up. Zach, have we fully realised the damage here, the ripple effect from all of these stories that are just building up day after day, week after week?
I don't think so, Jonathan. And I think we're really in for a long slog here. It doesn't seem like this situation is getting resolved quickly. So you're going to have more stories like this build up. It's going to play a role in the global financial markets. I think the biggest thing that we've seen recently and expect to see going forward is continued volatility. When you have really high inflation on top of this geopolitical backdrop, as well as very hawkish central banks almost across the globe, that's a very potent recipe for volatility. So we think that's what you're going to continue to see going forward. And the situation in Russia and Ukraine is going to continue to unfold and probably produce more volatility-inducing events in different parts of the financial markets.
Esty, does this make it difficult, uncomfortable, highly uncomfortable to be long European banks?
It certainly doesn't help the case. I mean, there's still questions about how the European Central Bank is going to react. We know a lot of these TLTROs are coming to expiry in June, and then the banks could get a second hit. So we don't know if the ECB is going to try to extend these or launch a new one and keep that little yield advantage for financials. But it's certainly the sanctions question is going to last a long time. I agree the situation is not going to be resolved anytime soon. Even if we get resolution to the conflict, I don't think all of the sanctions are going to be removed, at least not initially. So the European banking sector is facing that problem, and then is going to face that European growth question that we talked about at the beginning of the show. So a lot of different hurdles here for European financials. They've dipped a lot, but it's difficult to try to call a bottom here.
Robert, we've got time. I just have 40 seconds here, and if you need more time, I'll come back to you on this question. It's an important one. Do you think we've fully clarified the reaction function of big central banks like the ECB?
No. This is a test for them because there's a lot of uncertainty. I think that the first indication from the ECB, though, is that they've been given the mantle, as has the Fed, to fight inflation and to put growth at risk. And that's a dramatic change that we've seen over the last few months. It really came to the fore, began to with the Powell nomination, when he was renominated and Biden really put inflation as the priority because the politicians want out. They do not want to own this. And I think we saw that in Lagarde's most recent press conference, that the ECB now owns this and they're willing to take some risk with growth in order to make sure they contain inflation expectations.
Robert Tipp, let's continue on that point with Zach and Esty as well, going into the opening bell. Coming up, your morning calls, and later, can the big banks bounce back as the sell-off in treasuries returns? That conversation just around the corner. From New York, this is Bloomberg. Happening right now in Brussels, Jens Stoltenberg, the NATO Secretary General, speaking with reporters. When we get some relevant headlines, I'll bring them to you. Let's get the morning calls. Deutsche Bank upgrading Johnson Controls to a buy. $79 price target, seeing an attractive valuation following the stock's recent declines. Morgan Stanley tactically downgrading the mining sector to inline, cutting his view to reflect the growing risk of stagflationary shock. I'm going to come back to that in a moment. And Citi naming M&T Bank a top pick in regional banking, seeing further upside amid rising interest rates. They're three of the calls. Up next, can the big banks bounce back? This is Bloomberg. 25 seconds out from the opening bell this Thursday morning. Good morning to you. Equities with a little bit of a bounce on the S&P, up 0.5% on the Nasdaq, up 0.5% also. This equity market doing okay in the face of a treasury market sell-off that resumes. Yields higher, much higher. That's the opening bell in New York. Switch on the board and get to the bond market. Treasuries ended last month in the low 180s. Now with a move higher to 236.63 and up another 7 or 8 basis points. This morning, euro dollar 109.81, down 0.2%. Crude down about 0.6%. And as for this relationship with China, this headline just crossing the Bloomberg: the United States saying speculation of a deal on China's stock listings is premature. That headline just crossing. Happening right now over in Europe, in Brussels, Jens Stoltenberg continues a news conference speaking to reporters. He says the following: the NATO Secretary General says the use of chemical weapons will have wide consequences. We need to be working out what those consequences actually are. We've just wrapped up a NATO summit. This is the direction of travel from here. Leaders leaving that, they will go on to the G7 meeting. We have a G7 meeting. Then from there, we have an EU Council meeting as well. So the President busy today, Busy tomorrow as well, meeting with his Polish counterpart. So that's the story of the moment. About, what are we, a minute into the session? We're up 0.4% on the S&P. Breaking down the stock action, here's Taylor Riggs.
John, take a look at shares of Uber, from foe to friend. Uber now coming out and saying that they will start to list some of the New York City taxis on their app. It's sort of a good for both companies, right? If you think about some of the driver shortage that Uber's had to deal with, and then, of course, it sort of helps the city's taxis who've been hurt by ride sharing and, of course, the pandemic. So those shares are up about 4.5% on that partnership. Take a look at Nikola. Now, analysts went to that investor day, and JP Morgan is one of those who came away with that with a really positive impression, saying that he visited the manufacturing site, was able to test drive a few trucks. Those shares are up almost 17%. Spotify's another one where analysts are also actually pretty positive on the street. Spotify came to an agreement with Google that allows Spotify to bill users directly. The sign-up process will be more straightforward and sort of simplify that Android process. So analysts there are pretty positive. And finally, the last one that I was showing here, KB Homes, sort of the deliveries are coming in a little bit soft, given some bigger than expected supply chain issues. So, John, no signs there really of easing.
The Uber story, Taylor, is this about a lack of access to cars? Have they done this not as a favour, but because they need to?
Good point. You know, I think that Uber, as we know, was dealing with the driver shortage. And so I do think that this helps sort of relieve some of the pressure, maybe hoping that it'll reduce prices for some of the consumers. And then you think just big picture, sort of an adversary at first. And I do wonder the implications of bringing them back on board and sort of becoming a friend to the industry, how you think about that partnership going forward, getting those guys on your side.
Taylor, thank you. Taylor Riggs there with the latest, some of the stock moves this morning. Good to have Taylor Riggs with us around the opening bell. I mentioned a few times what's happening in Brussels, the meeting that's behind us, NATO, then onto a G7, onto a European Council meeting as well. About 15 minutes ago, we heard from the US announcing a new package of sanctions on Russian elites, lawmakers and defence companies too. President Biden just moments ago saying Russian elites and lawmakers should share in the pain. The picture's on the screen right now. Jens Stoltenberg, the NATO Secretary General, who gets a new one-year term, if we can call it that, an extension of 1 year. That was announced in the last 30 minutes too. He's speaking to reporters at the moment. As I've said repeatedly through the last 30 minutes, any relevant headlines, I'll bring them to you. One sector we're looking at in the equity market is the banks and the relationship between the yield curve and the financials and the performance of those stocks too. Here's Kaylee Lines with more. Hey, Kaylee.
Hey, John. Well, you're seeing today yields going back up. Therefore, the bank stocks are going back up. When we saw a bid into treasuries yesterday, these stocks were down hard, down about 3%. And actually, they are still down on the year. The KBW Bank Index is off by about 2.4% since the start of 2022. Of course, weighing on the banks, you have the idea of inflation, of slowing growth. Put that together with the prospect of a tightening Federal Reserve, maybe that picture starts to change. But the thing is, when you look at the relationship between these banks and the bond market, as we know, we have seen a massive move in yields this year, right around 236 or so. We're almost 90 basis points above on the 10-year Treasury where we began the year, more than 60 basis points above where we started March. And yet the move in financials has lagged that move in yields. Maybe that's because we don't need to look at the 10-year independently, John. We have to look at its relationship relative to other durations, taking a look at the shape of that yield curve. And that yield curve, by and large, while we may be getting some steepening today, the trajectory has been towards a flatter curve. 530 is hitting its narrowest spread between the two since 2007 yesterday. Even with a bit of steepening today, we're still sitting around 17 basis points. So when investors are looking at financials, what are they really looking at? Maybe it's just that yield curve, John.
Kelly, nice, great work. As always, we appreciate it. Thank you. Robert Tipp, first to you. Let's start with the yield curve. Then I want to turn to Esty and get her thoughts on the financials. Rob, if we haven't fully clarified the reaction function of central banks to what is developing in front of our eyes right now, can we make a call this year on the yield curve just yet?
Yeah, I think so. I think that actually where I thought you were going to head on the yield curve is all the discussion about recession in 2s, 10s. But I think we're at the stage in the cycle where yields have risen a lot relative to the spot administered rate. So in other words, you know, the forward curve has priced in 200 plus basis points of rate hikes from where they've started off, and they've moved 25. So this is a point where you need a continuing stream of incredibly strong data to keep pushing the forwards higher. The outlook, though, the market has bit down on the idea that the central banks will succeed eventually. And so the beyond 5-year part of the curve is keeping the faith, and I think that's correct. And I think the track record on soft landings is not as bad as people think. And these central banks are, with their transparency and their processes, I think they have better odds than they have had in the past. So I think what you're going to see is that administered rate climb the forward curve, and the points beyond the 2-year remain relatively flat. I think the interesting thing, though, and Powell pointed to this the other day, is that that very steep first 2 years of the curve is what people should be looking at if they're looking at to get a read on whether the economy is strong or not. And the 2s/10s is really not the place to look. It's a red herring. There's literature on that. I think in the past, it started off, people were looking at funds 10s, and then that migrated to people looking at 2s/10s, but the much higher quality signals in the front end. And the central banks, therefore, are likely to be climbing that curve, leaving that long end flat.
Can I come to you on this, Esty? What's more important as an equity investor, the high-quality signal that Robert Tipp describes, the part of the yield curve that Chairman Powell thinks you should be looking at, or just the fact that there is something else that the rest of the market is looking at? What do you do?
There's so many conflicting signals. There's so many different interpretations of the curve. When you look at the very short end, the middle part, as you were saying now, and the very long end, it's a question of seeing if the market is thinking at some point that the Fed will achieve this soft landing. And I would agree that it has a better chance given the current growth momentum and the savings that U.S. consumers have compared to previous instances. When you look at the very long end, then it doesn't look like there's as much of a concern about growth. But then when you look at the Fed futures market, you're starting to see rate cuts coming in already maybe at the end of 2023. So a very mixed picture. When you're thinking about the financials, or equity markets in general, it's a little bit of that combination. At this point, I think it's more about the short end and how that's going to react. We've already seen a lot of a reaction. And then that signal between the 2s and 10s could be one further indicator that adds to these growth worries. But when you're looking at the U.S., I really don't see see very small recession risk for 2022. So if your investment horizon is throughout most of this year and we have so much priced in already, your equity picture is starting to look a lot better already.
Zach, 2s/10s right now, 21 basis points. We were much lower earlier this week. Your thoughts on it?
Yeah, it's been an incredible flattening move, and we think the curve can continue flattening, but we would say that the 2s/10s curve as a recession indicator is not as strong as it used to be, and that comes down to just how much central banks have bought in government bonds and pushed the back end of the curve lower. So one way the Fed could maintain some steepness, and we don't think this will steepen the curve outright, but could result in a steeper curve than it would be otherwise, is an aggressive balance sheet runoff policy, which we now expect to be announced in May. And the big difference this time between now and in 2017 to 2019, when the Fed was reducing the size of its balance sheet, is other major global central banks will be doing the same thing. You won't have the big counterbalance from the ECB and BOJ, who were buying a ton of bonds back in the 2017 to 2019 timeframe. So we do think that has a bigger impact, but we don't think it precludes the curve from flattening more from here.
9 minutes into the session here, your equity market up about 1/3 of 1%. Top of the pile, materials and energy. Materials up by 0.7 of 1%. Energy, the winner of the year, the winner of today, the session, up by around about 0.5 of 1% on energy stocks. This from Morgan Stanley earlier this morning. I think this call is fascinating. They downgraded the mining sector. I wouldn't call them outright bearish, but this is what they had to say. Commodity prices remain elevated, yet downside risk are building on potential demand destruction. We are tactically downgrading the mining industry to in line, reflecting risk of a stagflationary shock. Esty, can I come to you on this? Your thoughts on this? That commodities might remain elevated, but the commodity producers may not perform as well because we start to think about so-called demand destruction.
It is one factor that we have to keep in mind, because if prices remain this high, you do have the question that inflation can become self-defeating in a sense, that consumers just postpone, don't want to spend that much, wait for things to improve. There at some point could be the question of how much the costs can continue to be passed on. We just came out of the lockdowns and had this big reopening and this real demand that came through. As that normalizes, I'd have to agree there is something of a risk. Stagflation, obviously, something of a risk as well. Not our current base case scenario. And I think it's probably a little too soon to start to look at that for the mining companies as well. But further out, I think it is a valid question.
Robert Tipp, what do you think? Final word.
Yeah, I think that a lot is priced into the markets. There's been a lot of anxiety. I think that the focus on Russia, Ukraine, given what we know about the situation, should probably be focused more on the central banks. I think that the worst, obviously the terrible humanitarian crisis is right there, but if that's not spilling over into a larger, wider conflict, the performance of the markets is going to come back to the central banks and the economies. And right now, I think the markets have priced in a lot from these central banks. Yields have risen a good deal, and yield is going to begin to kick in some of these, although it's hotly debated. It's going to depend on the economic outlook. Some of these higher yielding sectors, I believe, are going to begin to kick in terms of return.
Robert Tipp, Esty, Dwek and Zach Griffiths. Coming up, the president meeting with allies to discuss ways to pressure Russia out of Ukraine.
We always knew from the beginning that the power of sanctions and export controls takes time.
The President of the United States just wrapping things up at NATO HQ. From here, President Biden goes on to the G7 meeting and a little bit later an EU Council meeting as well. On to tomorrow, where he meets with his Polish counterpart. A busy day ahead in Brussels for the President of the United States. NATO leaders gathering in Brussels this morning. Good morning to you. The President of the United States going from here to a G7 meeting, then an EU leaders meeting a little bit later. Then tomorrow, the President of the United States meeting with his Polish counterpart. I'm pleased to say we can join Anne-Marie right now for a special guest.
Yes, that's right. As we see NATO leaders, the G7, as well as the European Union, really start to ramp up the pressure on President Putin. We are now joined by the Pentagon Press Secretary, John Kirby. Thank you so much for joining Bloomberg.
Happy to be here.
Let's begin with, we know what the G7 is going to state, a warning for President Putin on the use of chemical, biological, or nuclear weapons. And we hear allies say there will be, quote, severe consequences. What are those consequences?
Yeah, I think it's, we want to leave decision space for leaders, so I don't want to get ahead of decisions that they haven't made yet, and hopefully they won't have to make those decisions because Mr. Putin won't try to use weapons of mass destruction, biological or chemical weapons inside Ukraine. There's no reason for him to do that. Now, I will tell you, we haven't seen any indications that they're preparing to do that, but there are worrisome signs when they talk about it, when the Russians talk about it.
But they've even used these types of weapons in the United Kingdom.
That is what is so worrisome, is that when you hear the Russians talk about things, their playbook is, I'm going to accuse you of something I'm already thinking about doing. And that's what got our attention up. Again, we haven't seen indications that they're using them inside Ukraine or preparing to, but just the fact that they're talking about it. And this is, to your point, this is a country that has a history using biological and chemical weapons, either on an individual scale or on a mass scale.
And NATO's Jens Stoltenberg said there'll be dire consequences of those countries, though, near Ukraine. If there was a spillover effect of these types of weapons, would that trigger an Article 5?
I think that's a discussion that NATO would have to have. As you know, Article 5 is an armed attack against one, is an attack against all. And so you'd have to define an armed attack. And again, I don't want to get ahead of decision making here or speculate about hypotheticals. But clearly, one thing that is on display very, very dramatically here at NATO headquarters is how united the alliance is. It's more united, more determined, more resolved than certainly I've ever seen when I was in the Navy for 30 years. This is an alliance that is very aware of the real threat on its borders here with Russia and with Belarus and with Ukraine. And so I think you're going to see them continue to talk here today about how do we increase that posture, how do we reinforce it, and what's the long-term posture look like? Because
do you keep those troops there that you're deploying now?
Exactly right. So obviously we want the war to end. No matter when it ends or how it ends, I think it's fair to say that the security environment in Europe is now changed and will stay changed, given what Mr. Putin has proven that he's willing to do right on NATO's doorstep.
So we're looking at long-term American troops based on the eastern flank.
Well, we don't know yet. I mean, but part of the discussion today is going to be, what does that posture need to look like? I'll tell you, before the war, there were 80,000 American troops in Europe on rotational or permanent orders. Now, there's more than 100,000. And we're not ruling out the possibility that we'll send more troops. Now, these are temporary deployments, but one of the things that we're going to be talking about in the Pentagon after this meeting, and I'm sure they're talking about it right now, is should the posture of NATO's eastern flank change in more permanent ways going forward based on what we've seen Mr. Putin do?
Now, since there is a lot of concern about the use of these weapons of mass destruction, just yesterday, though, Jake Sullivan said there was no need to change the U.S. posture. But you're saying that a lot of the times when the Russians talk about these actions, they sometimes use them. Is it irresponsible to not change the U.S. posture?
What Mr. Sullivan was talking about was our nuclear strategic deterrent posture, because, as you know, a couple of weeks ago, Mr. Putin said something to the effect of putting his nuclear forces on heightened alert. Well, that certainly got everybody's attention, and we monitored that very closely. What I would tell you is we look at it every day, the nuclear strategic situation, and we haven't seen any reason to change our strategic posture in the United States. We're very comfortable, very confident that that when it comes to a strategic deterrent posture, the United States is prepared to defend the homeland as well as our allies and partners.
When you look at the risk calculus, we're talking about chemical, biological, and nuclear potential weapons. How do you rate that risk?
Well, first of all, the stakes are very high when you're talking about weapons of mass destruction, just because of the kinds of damage that they can do. And so there's nothing more sensitive or taken more seriously in the halls of the Pentagon than looking at what our strategic posture needs to be on any given day. I mean, because the stakes and the risks are so high. I would like to come back, though, to the central point, which there's no need to, there shouldn't be a need for us to be worried about this or concerned about this if Mr. Putin would just do the right thing, negotiate in good faith with President Zelensky, and end this war.
But it looks like he's bogged down militarily and he's digging in his heels. He's feeling the pinch of the sanctions a little bit, not so much yet. What are his options militarily from your lens now that he's kind of cornered?
The best option right now would be to sit down in good faith with the Ukrainians and work out a negotiated settlement and get his troops out of Ukraine. That's the best option. Short of that, what we're seeing them do is increasingly go on the defense now. They were on the offense in the first couple of weeks of this war. Now we're seeing them pushed back by the Ukrainians. The Ukrainians are moving from strictly defensive posture to offensive posture because they've got the security assistance that keeps coming from the West, from the United States. They have a sense of momentum, and the Russians are having food problems, fuel problems, sustainment issues. They have not managed themselves well on the battlefield, and we have indications of low morale, poor leadership, not great command and control by their senior leaders. So the Russians we're seeing in some places, particularly around Kyiv, are now settling on the defense rather than the offense.
When it comes to the assistance to Kiev, we heard from President Zelensky, or you did, inside the NATO meeting. He addressed NATO leaders. He criticized NATO leaders for not delivering a no-fly zone and also for not 1% of the defense of the collective NATO members. What more can the U.S. do?
I'll tell you, we're doing a lot more. The president just signed, as you well know, a week or so ago, another $800 million. That brings to $2 billion in President Biden's administration of security assistance to Ukraine. $2 billion. And we are already starting to deliver on that $800 million that the president just approved. It'll start arriving here in the next day or so. Some early articles have already started showing up. And what's important here is the kinds of things the United States are giving to Ukraine are the kinds of things they're actually using very effectively. Short-range air defense. We're working with allies and partners to get them long-range air defense, body armor, small arms and ammunition, Javelin anti-tank rockets, Stingers, which are helping bring down Russian aircraft. I mean, we are very actively engaged in helping them use the kinds of things that they are trained on and know how to use. And this is another point that I think gets forgotten, and I want to just say, over the last 8 years, the United States, the United Kingdom and Canada, other allies, have been training Ukrainian armed forces. So everybody's focused on the stuff, but I think we need to remember that the Ukrainian armed forces are doing so well, not only from their own bravery, clearly they're brave, but because they have been well trained over the last 8 years.
But why before the invasion it wasn't considered escalatory to send in weapons like MiGs, and now it is seen as that would be an escalatory movement?
I'm glad you asked that question. One thing is for sure, the United States has not put a veto on other nations who may want to provide aircraft to the Ukrainian armed forces. President Zelensky says he wants them, and individual nations can make those sovereign decisions. The proposal that the United States did not agree with was the idea of transferring to the United States custody for the United States to deliver them.
So
and
this is
reasons.
about no one wants to be the final hand to touch them into Russia.
I wouldn't say that. Not at all. For the United States, we're focused on providing the kinds of materials, as I said, that we know they're using very, very effectively, and the most effectively. And that's coming from air defense systems, both long and short range. And so that's what we're focused on. Now, our intelligence community made an assessment that should the United States, not other countries, but should the United States provide fixed-wing fighter aircraft, that could be misconstrued as escalatory in Mr. Putin's mind. And I think we can all understand, given that we're talking about two nuclear powers here, that we don't want to run unnecessary risks in terms of escalating.
Speaking of escalating, I know the administration has said it would be escalatory for a no-fly zone. But we've seen American journalists die in Ukraine. We've seen 10 million people displaced.
Yeah.
It's a huge number.
Yeah.
What would it take for the United States to agree to a no-fly zone?
The President of the United States has made it clear that U.S. troops are not going to be fighting in Ukraine, and that includes in the skies over Ukraine. And again, so I want to make a couple of points here. I mean, a no-fly zone sounds like a nice policing effort. It's not. It's combat. You have to be willing to shoot and be shot at. And that means you're also going to have things on the ground to support your aviators in the air. Again, the president's been very clear that we're not going to have U.S. troops fighting in Ukraine because the risks of escalating this between the United States and Russia, making this a war between those two countries, is far too great if you try to execute a no-fly zone. And I would argue that many NATO nations feel the same way about putting their pilots in that harm.
I think we lost connection there with Brussels. I think that's pretty obvious. Bloomberg's Anne-Marie speaking to John Kirby, the Pentagon spokesperson. If we can re-establish that connection, I'll go back to it. You heard a series of questions there about a no-fly zone, what it would take to send more weapons into Ukraine, and whether sending the MiGs is a so-called escalatory step. Hopefully, we can get back in touch with Brussels and continue that conversation. But from me, that does it for me. From New York City, this was the countdown to the Open. This is Bloomberg.